Treasury calls for stricter cryptocurrency compliance with the IRS, says they pose tax evasion risk. So let's get into the story. So the Treasury Department on Thursday announced that it is taking steps to crack down on cryptocurrency markets and transactions, and said it will require any transfer worth $10,000 or more to be reported to the Internal Revenue Service. Cryptocurrency already poses a significant detection problem by facilitating illegal activity, broadly including tax evasion, the Treasury Department said in a release. This is why the president's proposal includes additional resources for the IRS to address the growth of crypto assets, the department added. Within the context of the new financial account reporting regime, cryptocurrencies and crypto asset exchange accounts and payment service accounts that accept cryptocurrencies would be covered. Further, as with cash transactions, businesses that receive crypto assets with a fair market value of more than $10,000 would also be reported on. Bitcoin reversed course shortly after the Treasury's announcement and was last seen trading up 1.6% according to coin metrics. And previously in the session, it was up more than 9%. So a growing number of Wall Street analysts have over the past month sounded the alarm that regulators at the Treasury and Securities and Exchange Commission could soon take a more active role in cryptocurrency regulation. So the Treasury Department's release came as part of a broader announcement on the Biden administration's efforts to crack down on tax evasion and promote better compliance. Among proposals officials are considering are bolstered IRS funding and technology and more severe penalties for those who evade their obligations. According to the Treasury's estimates, the difference between taxes owed to the U.S. government and those actually paid totaled nearly $600 billion in 2019. Increased regulation will likely upset some cryptocurrency investors who have seen the value of Bitcoin slide about 25% over the past month and talk of capitalization creep onto online forums. And with longtime cryptocurrency expert Gary Gensler at the head of the SEC, Raymond James expects it's only a matter of time until Congress grants the regulator broader jurisdiction. He told lawmakers earlier this month that allowing the SEC to regulate cryptocurrency exchanges will help ensure investors are protected and prevent market manipulation. Chairman Gensler is viewed as a potential ally for cryptocurrencies as a former professor on the topic. However, these statements are likely to revisit debates regarding the regulatory risk to cryptocurrencies and exchanges, Raymond James analyst Ed Mills wrote earlier in May. In the short term, this could cause headline risk, he added. However, in the medium to long term, regulation would add further legitimacy to the asset class and could provide a regulatory moat around existing cryptocurrency exchanges. While involvement by the Treasury Department and the SEC may ultimately prove a boon for cryptocurrency investors, any near-term regulatory hurdles will likely come as another bother for investors in Bitcoin, Dogecoin, and the like. Those sentiments were echoed by Miller Tabak last month when the firm told clients that cryptocurrency markets are not properly considering legal risk. Confirmation of Gary Gensler as SEC chairman and cryptocurrency volatility over the weekend following rumors of tighter regulation highlight the regulatory risks facing this industry, strategic economist Paul Shia wrote in April. The difference in regulatory risk and progress as a means of payment raises an important question. Are other coins recent success due to good news about them, or are they piggybacking on positive sentiment related to Bitcoin, he added. Democrats and Republicans alike have made cryptocurrency regulation a top priority in 2021 as run-ups in the price of Bitcoin and other digital assets last year sparked concerns of market manipulation and uninformed retail investments. Feel free to give your thoughts on this, share this as well with someone who might need to see this, but the thing that you got to understand for those that end up watching this or listening to this, people have different views on cryptocurrency, right? But the purpose of cryptocurrency is to be a currency. Now, also you got to understand too that the more regulations that the US imposes onto cryptocurrency basically starts to push the super wealthy holders of cryptocurrency to leave the United States or to never move to the United States. And what I mean by this is that let's take, for example, a country like Singapore, right? Which is one of the most free, I think it is actually technically listed as the most free financial country, right? The United States is not the most free financial country. And so I believe in Singapore, you don't actually have to tell them anything about how much money you actually own, how much money you actually have, and you're only taxed, I believe, at 10% of your income, which means people who end up holding a crazy ton of money, they could technically have no income, right? Which means they won't actually pay taxes in Singapore. So the way I see it, the more regulations that the United States ends up putting onto cryptocurrency investors, it basically pushes super wealthy individuals in this space to go elsewhere, right? They're making the United States less competitive. And when you make it less competitive, that means people who would bring in a lot of money and potentially do a lot of things with that money in your country are basically going to go bye-bye, right? Like, why would they stay in this country? Why would they stay a U.S. citizen? Like, can you imagine if someone was like holding like $1 billion in like, let's say Bitcoin, right? And then the U.S. ends up, going absolutely nuts with the regulations and the taxes and all that kind of stuff when it comes to cryptocurrency. That person is probably just going to denounce their citizenship, move to a different country that it's financially more free, like Singapore, and never have to deal with the US ever again, right? Like, that money's never coming back. That's the same issue with raising the corporate tax rate to super high levels, because you're not going to get those businesses back. You're making it less competitive, less enticing for people to go to the United States, right? And the whole point is you want people to come to the United States with a lot of money because they could do a lot of things with that money. They could create businesses. They could invest into businesses. They could be VCs. They could be angel investors. They could donate money to charities that could potentially help different communities, right? They can maybe fund a school and help people in lower education or poor counties and then end up helping them with their education, right? Like, there's a lot of things that they could do with that money within the states, but if they are basically getting smacked around by the IRS, they're not going to get any benefit. Like, why would they stay basically in a country that ends up hating them, right? So there's a lot of risk that comes along with trying to put so much regulations. And then this is also another thing. Can you truly regulate cryptocurrency, right? Because there's going to be cryptocurrencies out there that they have no control over and they have no access to, right? I believe there's like a cryptocurrency out there, I believe it's called Monero, where that thing's completely anonymous. Like, everything about that, I believe, currency is completely anonymous, where people could end up doing transactions completely non-publicly, right? So for all those people who end up doing like super shady crap, they could probably move into something like that or some other cryptocurrency that's super, I don't know, like shady, and end up doing something like that, right? Whereas if, they had less regulations when it comes to cryptocurrencies, which pushes more and more people to go into, like, let's say Bitcoin or something, or Ethereum, all that stuff is public. All that stuff is tracked. Every transaction is tracked with those two things. So you know what's going on. You can see where the money's going. You can see where the transfers are coming from and to, right? Which gives the government access to all this information that they could then use to stop people from doing criminal activities or doing something stupid or stealing money from people, right? So this whole like increase the regulation thing is going to be a super big issue, and it's going to be a really big negative when it comes to the United States and for like people who want to diversify their income or all that kind of stuff, right? But there's a lot of fairly wealthy individuals who are putting like a portion of their portfolio into the main cryptocurrencies to just diversify and let that thing grow because they believe that it has some viability. But if you end up regulating it to such a degree where they're not going to put any more money into it, then you're going to basically destroy different currencies, and it's just going to be a big issue, right? But either way, I mean, there's technically nothing stopping someone moving to a different country, creating a brand new like crypto wallet or a crypto mine, getting money like that, and then like living their life in a different country, right? Like there's nothing stopping someone from doing something like that. So how much can they really do when it comes to regulation on cryptocurrency? Honestly, probably not that much. Probably the most that they could truly do is something dealing with taxes. But at the same time, if you increase the taxes too much on this stuff, if you make it too hard for people to really make any money from it, then they're just going to leave the country, right? Like there's going to be a lot of people leaving the country, especially a lot of people with a lot of money are probably going to just leave the country because they have the ability to just leave the country because they have currencies that can be used anywhere in the world, technically speaking. Feel free to give your thoughts, share this with someone that might need to see this, but like, man, the more regulations, the less competition, and it's just going to be bad.